Burkina Faso has just made one of the boldest and most strategic moves in recent African history. Two major gold mines, once valued at $300 million, are now under national ownership, and the government secured them for just $60 million. That's right, a deal that shocked the global mining industry and signaled a powerful shift in Africa's economic direction. In this video, we'll break down how Burkina Faso pulled it off, what it means for the country, and how it could reshape the future of mining across the continent. The two gold mines, Boungou and Wagnion, were previously owned by the British company Endeavour Mining. Just last year, Endeavour was set to sell them to the American firm Lilium Mining for a staggering $300 million. But when legal disputes disrupted the deal, the Burkinabe government saw a once-in-a-generation opportunity and took it. Under the leadership of President Ibrahim Traoré, the country stepped in and purchased the mines for only $60 million, a discount of nearly 80%. This isn't just a smart business decision. It's a game-changing move to reclaim control over Burkina Faso's most valuable natural resource. By bringing these gold mines under national ownership, President Traoré has sent a clear message. Burkina Faso is done giving away its wealth. The country is ready to manage its resources, shape its future, and build real economic independence. Now, instead of profits being shipped off to overseas shareholders, the wealth generated from these mines will stay in the country. This means more money for the national treasury and more funding for public services like healthcare, education, infrastructure, and community development. And that's not all. As part of the deal, Burkina Faso will also earn royalties from up to 400,000 ounces of gold sold from the Wagnion mine, adding an estimated $20 million more to the country's revenue. If you're inspired by what you're hearing so far, help us share stories like this by liking this video, subscribing to our channel, and hitting the notification bell so you never miss an update about Africa's transformation. Let's continue. Beyond financial gain, this move has huge implications for the people of Burkina Faso. It's estimated that the two mines currently support over 4,000 jobs, both directly and indirectly. Now that the government is in charge, there's potential to create even more employment opportunities, expand training programs, and invest in skill development across the country. This is not just about gold. It's about unlocking human potential. The ripple effects will reach deep into local communities. With more money staying in the country, families can expect better access to services, while areas surrounding the mines will benefit from dedicated development funds designed to improve quality of life. Roads, schools, clinics. The impact could be life-changing. What we're seeing in Burkina Faso is part of a larger wave across the continent. For years, many African nations have been stuck in a pattern, rich in resources but poor in outcomes. Foreign corporations mined the wealth while the people were left behind. That's what's often called the resource curse. But now leaders like President Traoré are challenging that legacy. By nationalizing these mines, Burkina Faso is flipping the script. It's not just about claiming assets. It's about building the internal capacity to manage them. This is the idea of endogenous development. Real progress must come from within. Burkina Faso is showing that with vision and courage, a nation can take back control and pave its own path forward. And this bold move is already inspiring others. Countries like Niger and Mali are also rethinking their relationships with mining companies and foreign investors. A new era may be unfolding, one where African nations insist on fairer deals and long-term benefits for their people. Of course, there are challenges. Mining is a highly technical and capital-intensive industry. Burkina Faso will need to invest in training, education, and modern equipment to ensure the mines operate efficiently and sustainably. Managing international pressure and maintaining investor confidence will also be crucial. But the Traoré administration isn't stopping here. In another groundbreaking step, Burkina Faso has begun building its first state-owned gold refinery. This refinery will allow the country to process gold locally. No more sending raw gold abroad only to buy back finished products at inflated prices. With local refining, more value stays in the country, more jobs are created, and the entire gold industry becomes a powerful engine for national development. This refinery isn't just a building, it's a symbol of economic freedom. It's a key part of Burkina Faso's bigger strategy to break free from the neo-colonial economic model that has dominated Africa for decades. Now, for the first time in generations, the people of Burkina Faso will benefit directly from the gold that comes from their own land. Imagine what this could mean for the future. Stronger schools, better hospitals, improved infrastructure, and new opportunities for local businesses and entrepreneurs. When national wealth is reinvested in the people, the impact goes far beyond numbers on a balance sheet. It becomes real, visible, and transformative. As part of the deal, communities near the mines will also receive direct support through development funds. These investments will go into building roads, clinics, and education centers, creating a stronger foundation for future generations. It's clear that President Traoré is playing the long game. The nationalization of these mines and the construction of the refinery are not isolated events. They're part of a bold strategic vision for Burkina Faso's future, one of self-reliance, sovereignty, and shared prosperity. This move is turning heads across Africa and the world. Other African nations are watching closely, considering similar paths as they seek to take control of their natural wealth. Could this be the start of a new chapter in Africa's relationship with its resources? The international mining industry is paying very close attention to what's happening in Burkina Faso. Some multinational companies may push back, viewing this shift as a threat to their traditional business models, which often favored easy access to resources and minimal oversight. There may be lobbying, legal challenges, or even political pressure to maintain the status quo. But others, the more forward-thinking and adaptable investors, may begin to recognize a new reality. The days of one-sided deals and unchecked exploitation are coming to an end. A new era is dawning, where African nations are no longer passive participants but active decision-makers in how their resources are managed. For companies that are willing to engage in good faith, with respect for local laws, fair profit sharing, and a commitment to community development, this shift opens up new opportunities. This emerging Africa offers not just access to raw materials, but real, long-term partnerships built on mutual benefit and trust. In this new landscape, investors who align their interests with the growth and well-being of the host nations may find both profitability and purpose. In conclusion, Burkina Faso's $60 million deal to reclaim its gold mines is more than a financial win. It's a statement of independence, a declaration that the country will no longer be on the sidelines of its own economy. It's a powerful step toward a future where the people benefit first and where Africa redefines how it manages its own wealth. What do you think? Is Burkina Faso setting a new standard for economic sovereignty in Africa? Could this bold decision spark a wave of change across the continent? Let us know your thoughts in the comments. Don't forget to like this video, share it with others who care about Africa's future, and subscribe to stay updated on more powerful stories from across the Sahel and beyond. The winds of change are blowing, and Africa is watching.